Hello everyone, welcome to JAIIB CAIIB English Medium. My name is CA Aarti and I hope you all are doing good. So today is our day 2 of 5 minutes concept, and today I am going to tell you one numerical concept which is very repetitive in your exam. So let's start without any delay. So today's topic is your payback period, one of the easiest topic and one of the most repetitive topic you can say. Now what is the meaning of it? Yes. So payback period means the period at the end of which the initial investment is entirely returned to the investor. In simple terms, if I tell you, quickly let's take one example. If I say I am purchasing 5 lakhs, I invested 5 lakhs and I purchased one car. Yes, now I used this car for rented purpose, and from that rental I earned every year 1 lakh, 1 lakh, 1 lakh. Now if you are my friend and if you ask me, or if I ask you that in how many years I can get back my invested amount, so what will be your answer? That is going to be 5 years. Yes, how this is your 5 years? In your first year you are able to recover 1 lakh, this is your first year. In your second year also 1 lakh. In your third year also 1 lakh. In your fourth year also 1 lakh. And finally in your fifth year you are going to recover 1 lakh. And you just need to add all these things and you will say within 5 years I can get back my invested amount. And this is what your payback period method means. This is the you can say time period in which you can get your invested amount back. Correct? Now always remember, as soon as this investment is available to you, that in how many years you can get back, like in 5 years, after that you will stop calculating. Yes, so payback period is like a non you can say time value of money method. This is also calculates up to the time when you can get back your invested amount. After that it stops calculating. So let's take one numerical formula here. If your amount that you are getting back in future is always constant, like we have taken here example now, 1 lakh, 1 lakh, 1 lakh. If this is your constant cash flow, okay, this is what type of cash flow? Constant one. Then you can use this formula, that is amount to be initially invested divided by estimated annual net cash inflow per year. So how much initially I invested for purchasing that car? Rupees 5 lakhs, and annually how much I was getting through the rental income? That is 1 lakh. So what is my payback period? That is going to be 5 years. Yes, chaliye. So let's quickly solve one question based on it. Suppose a project cost is 20 lakhs, yields annually profit that is 3 lakh after depreciation, and that is 10%, but before tax it is at 50%. Now what you will do here, you can see cost is given, that is equal to 20 lakhs. Yes, and with this cost you can calculate here depreciation also. So what is your depreciation amount? 20 lakhs divided by, okay, so you have here in depreciation in 10%. So this is going to be 2 lakhs. Every year you are going to charge depreciation. Now when we are taking your annual net cash inflow, this is going to be after tax, and in that you will add your depreciation amount also. So this is the annual profit after depreciation. Yes, you have profit after depreciation which is equal to 3 lakhs. Now in this you will pay first of all tax, that is going to be 50%, means 1,50,000, and if you subtract it, this is going to be profit after tax. But in real sense there is no outflow of your depreciation amount. Yes, so you are going to add back this 2 lakhs in your profit after tax. So this is going to be 3 lakh 50. And how much you invested? Now every year, this is per year amount. So what is your payback? Payback period equal to said amount 20 lakhs divided by your annual cash flow. Yes, so this is going to be 20 lakhs divided by 350. So 5.71 years, this is going to be your answer. This much quick you need to solve in exam. Here I have to write so many things, but remember, in case of constant cash flow, you need to work according to it. Let me tell you once again, if cash flows are different, this can be your one doubt, and in that case, how to solve it. So let's solve a next question. A company is evaluating a project costing 6 lakh and the expected cash inflows are given as 1, 2, 3, 4, 5. You have here following cash flows. Yes. Now in this situation, when cash flows are different, you will take here cumulative one. Means you will take here for the first year how much you recovered, 1,20,000. In next year how much you recovered, 1,20,000 plus 1,80,000. Means up to 2 years you have recovered up to 3 lakhs. If you add again 2,40,000, in your third year you could have recovered 5,40,000. If you add 2,70,000, that is exceeding your 6 lakhs. So in this case, you need to calculate payback period. Means you will work for full 3 years. But in case of next year, this 2,70,000 is for your 12 months. Yes, and we want how much extra amount? Only 6 lakh minus 5,40,000. Yes, one of the feature of payback is as soon as you recover your invested amount, you will stop calculating it. So 6 lakh minus 5,40,000. This is going to be your 60,000. So we want only 60,000, and in how many months we can recover it? That is what we need to find it out. So 60,000 divided by 2,40,000. So this is going to be 60,000 divided by 2,40,000, and answer is 3.25 years. Remember, this is your quick revision series. This is not your conceptual daily series. If you have done it, then you know it what I am doing. So remember, if you want to revise it, okay, so please watch this series. But if you're watching it first time, then please first watch this in classes or conceptual classes. After that only you can understand what we are doing here. Yes, chaliye. So this is now your homework question, everyone. Take this as your homework and share your answer through the comments. Yes, as you can take, this is your theory question. Chaliye. So here we complete today's session also. Thank you everyone for joining. Take care and